Hi there, it's Jason here from the Accounting Student Network. Now in today's coffee break session I'm going to elaborate a bit further on DEADCLIC. Now DEADCLIC is my preferred method of double entry bookkeeping. In the last coffee break session, which was last week, I described DEADCLIC, what it means, how it works. So I'm not going to go too much into detail about what DEADCLIC is this week. I'm merely going to show you how I use it to complete some T accounts, which you'll see on the screen. I've got the little table here just to remind you of how it works, but if you want to refer back to some more information on the detail of it, then you can look at the last week's coffee break session, which is on the YouTube channel. So what I'm going to do is work through a short exercise. I'm going to whip through it fairly quickly because I want to keep the session sort of 5 to 10 minutes long. But obviously if you do get stuck, you can always pause it, obviously. So I'm going to complete the T accounts that you'll see on the screen using these 7 transactions here, just to sort of reiterate how DEADCLIC works in practice. So last week very much described the method of DEADCLIC. This week it's going to sort of show you how it works in practice effectively. So I've got my T accounts here, which you'll see on the screen. So I'm just going to briefly run through the T accounts and what they mean. So we've got the bank account here. Now the bank account is something you own, so it's an asset. We've got an account called B. Blake. Now B. Blake in this case is the proprietor of the business. So it's a capital account. It's a capital account because it's money owed by the business back to B. Blake. So it's a liability account, although it's obviously got its own heading as a capital account, but it is a liability of the business effectively. The shop account, something you own, so again it's an asset. Inventory, now inventory, stock, the same sort of thing, something you own, so it's an asset. For this exercise, we're not going to worry too much about sales and purchases. We're just going to concentrate on how the T accounts work using DEADCLIC, so don't worry too much about the sort of detail of the transactions, if you like. Now D. Smith is a creditor, so he's a liability account. And lastly, J. Brown is a debtor, so he's an asset account. So I'm going to whip through these 7 transactions here and just show you on the screen how DEADCLIC works in practice. So I'm going to refer to DEADCLIC every time I enter these transactions, just so you can see how it works. So our first transaction says the introduction of capital. It says B. Blake started in business and deposited £60,000 into a bank account opened specifically for the business. So what is the double entry there? So he's deposited £60,000 into a bank account. So we've added £60,000 to our bank account here. So we've increased an asset. The bank account is an asset and this is an increase of £60,000. And as you can see, DEADCLIC rule is always relating to increase. And an asset is there, so it's a debit. So I'm going to type in there £60,000. Okay. So hopefully you can see what I've done there. We've increased the bank account, we've increased the asset by £60,000. DEADCLIC always follows the increase rule. The bank account's an asset which is there, so it's a debit. So the other side of that transaction is going to affect B. Blake's capital account. So we're increasing the amount of capital that's owed back to B. Blake. So the capital account, which is here, the capital account down here, again we're increasing it, so we're following the DEADCLIC rule of increasing. We're increasing capital, which is there, so it's got to be a credit. So I'm going to type in there £60,000. Okay, on to transaction number 2, the purchase of an asset by cheque. Blake buys a small shop for £32,000 paying by cheque. So we've got a shop account here, so we've increased the value in that account because the shops come into the equation, so we're increasing that value by £32,000. Again, it's an asset, increasing is a debit. So we get to the shop account and we type £32,000 into there. Now he's paid it by cheque, so it's come out of the bank account. So we're going against DEADCLIC this time. We're decreasing the value of an asset. So there's an asset, so it would be debit if we were increasing, but we're not. We're decreasing it, so the opposite is true. So I hope that makes sense. Hopefully it follows the rule that I explained last week, that the DEADCLIC table here always relates to increasing the value in an account. But this time, we've got an asset, but we're decreasing the value. So it goes against the DEADCLIC table here. So it's a decrease, so it's a credit. So there's the asset there. So we're going to say £32,000 has come out of the bank account there. So number 3, the purchase of an asset and the incurring of a liability. So Blake buys some goods for £7,000 from D. Smith and agrees to pay for them sometime within the next 2 weeks. So he's bought some goods, so the goods in this example go under inventory. That could be stock, but we've called it inventory for now. It's an asset. So we've purchased an asset, so we're increasing the value of this account. So there's an asset, we're increasing, so it's a debit. So inventory is £7,000 and we bought them from D. Smith. So there's our D. Smith T account, which is a liability. We're increasing a liability, so it's a credit, following exactly the correct rules. So we put a credit in there of £7,000. So number 4, sale of an asset on credit. Goods which cost £600 were sold to J. Brown for the same amount, the money to be paid later. So this time we're selling an asset, so we're decreasing the value of an asset. There's an asset, so if we were increasing it would be a debit, we're decreasing it, so the opposite is true, so it's a credit. So in the inventory account we say £600. And there's J. Brown, so J. Brown's a debtor, he owes money to the business, he's an asset account therefore, and we're increasing the value that he owes to the business. It's an asset, we're increasing it, so it's a debit. So he's going to have £600 there on his account to be paid later. So number 5 is sale of an asset for immediate payment. Goods which cost £400 were sold to D. Daly for the same amount and Daly paid for them immediately by cheque. So we're selling some stock. So again, stock is an asset. We're not increasing it, we're decreasing it. So it's not a debit, it's a credit. So £400 goes in there. And the £400 was paid immediately by cheque. So it's increased the bank account. The bank account is an asset. Increasing an asset is a debit. So back up there, £400. So we've got 2 transactions to go. Blake pays a cheque for £3,000 to D. Smith in part payment of the amount owing. So £3,000 coming out of the bank account. The bank account's an asset. We're decreasing it. So we're going against DEADCLIC. So the opposite of debit is credit. So we move up there and we've paid £3,000 out. Now D. Smith's liability account. At the moment, we owe him £7,000, but we're now decreasing that value. We're decreasing the liability. So there's a liability. Now remember, increasing the liability is a credit. We're decreasing the liability, so it's a debit. So £3,000 goes in there, and that settles part of D. Smith's invoice. And the last transaction, collection of an asset. J. Brown, who owed Blake £600, which is there, makes a part payment of £200 by cheque. So £200 come into our bank account to increase the bank account. An increase in asset is a debit. So the bank account has now got £200 more in it. But J. Brown's account, he's also an asset, but we're decreasing the value of his account because he's paid us some money. Asset increases debit, we're decreasing it, so it's a credit. So I'm going to put £200 in there. So there we go, that's our 7 transactions, and hopefully that makes sense how I've entered them in the T accounts and how I follow the DEADCLIC rule, remembering that the table here that we follow is when we're increasing the accounts, but if we're decreasing the accounts, it's the opposite. So I hope that makes sense. I know I've gone through it very, very quickly, but obviously you can watch it again or pause it if you need to, but I've kept it short deliberately because it's our coffee break clip, which I always try to keep sort of 5–10 minutes long. So, hope that makes sense, hope that's helpful. See you next time.